Are you looking for stable, ethical revenue stream in 2025? Well, imagine that you can earn reliable yields from major government and corporate projects without the volatility of the stock market or interest rates. Enter Sukuk, the asset-backed bonds that are catching investors' attention globally. Stick around to find out why global investors are adding Sukuk to their portfolio. Welcome back to the channel. I'm your host, Ali. And today, we're going to demystify Sukuk, how they work, why the yields are attractive, and how you can get into it. Whether you're a beginner or intermediate, at the end of this video, you're going to find insightful information that's going to help you stabilize your portfolio. If you're new to the channel, subscribe and like this video and share it with others who might be interested. Let's get into it. Sukuk are fixed income securities backed by tangible assets. Think real estate, infrastructure, or government projects. Unlike conventional bonds, they don't pay interest. Sukuk distribute profits based on the underlying asset. There are three types: ijara, which is lease-based; murabaha, which is profit margin over cost at a price sale; and musharaka is joint venture. It's shared profits based on partnership. I'm going to provide an example of each so you can understand them better. Let's talk about the first one, which is ijara. The structure of ijara is investors purchase an asset and lease it back to the originator, i.e. the company or the entity that needs it. Lease rentals are distributed as periodic income, and the asset is returned or sold at maturity. As an example, there's a renewable energy company that needs to raise $10 million to buy a solar farm. That company would form a special purpose vehicle, also referred to as an SPV, and issues a $10 million Sukuk certificate to investors. Investors will fund the SPV, and the SPV will buy the solar farm. Then the SPV would lease back the farm to the company on an annual or biannual 5-year lease agreement. The company pays these fixed lease rentals to the SPV, which then passes on to Sukuk holders as income. At the end of the 5 years, the company buys back the solar farm from the SPV at a pre-agreement purchase price, and Sukuk certificates are redeemed at full by that point. The key features here is it's an asset-backed with lease rentals as returns, and investors bear limited risk. If the company defaults, the underlying asset could be sold to someone else, another renewable energy company. So it's very low risk. The second type is murabaha, and that's the cost plus sale Sukuk. And the structure is the investors purchase a commodity or asset on behalf of the originator and sell it to the originator at a marked up price with deferred payments over a certain period. Profits on the markup are distributed as returns. So let's use an example. Let's say a trading firm needs $5 million to import and sell industrial smart machinery. An SPV issues a $5 million murabaha sukuk to investors and uses the proceeds to purchase the machinery from the supplier. The SPV then sells the machinery to the trading firm at cost plus fixed profit margin, and that is payable over, let's say, 3 years. The trading firm makes quarterly deferred payments to the SPV, which then passes these payments, the cost plus profit, to Sukuk holders. Once all the payments are complete, the Sukuk certificates are fully redeemed, and the company now, or the trading firm, now owns that asset. The key features of this is it's trade-based financing with predetermined profits, so it's not affected by central bank rates or anything else. Returns are fixed and predictable. You know how much money you're putting in, you know how much money you're putting out, and everybody knows exactly what to expect. No gray areas in this one. The last one is musharaka, which is a joint venture. And the structure is very simple. Investors and the originator contribute funds to a project or a business, and then they share in the profits and losses. A quick example is a developer needs to build a $20 million building. An SPV issues a $20 million sukuk for musharaka. Then both the developer and investors contribute funds to the SPV, but it's going to be predetermined ratio. So let's say in this example, 70% of the SPV will be contributed to by investors, and 30% will be contributed by the developer. Then the SPV, on behalf of both investors and the developer, fund the joint venture. Now, once this is built, let's say it's a mixed-use building with rental and sale spaces. All the profits are distributed annually according to the ratio between investors and the developer. And vice versa, losses also take away from profits. So if they lose some money and they make some money, it'll reduce their annual income. Now, the key features here is it's equity-based with a shared risk-reward. So everybody's has skin in the game. And returns vary based on the performance of the project. And let's say if it's a rental building or a lease building, it could be multi-decade. So I like this one the most because it provides fixed income over longer periods of time. These three sukuk illustrate how Islamic finance principles are used to create Sharia-compliant investment instruments, each suited for different types of financing needs and risks. Let's talk about growth and trends. The global sukuk market reached $1.2 trillion in 2024 and is on track to grow 7% to 10% year over year. Some of the global leading issuers of sukuks is Indonesia, Malaysia, and Saudi Arabia. Now, one of the rising trends in sukuk is green sukuk, and these ones are funding renewable energy and sustainable projects, blending ethical impact and financial returns. These typically have a return range between 3% to 6%, depending on the credit quality and the duration of the project. Now, the three that stand out the most are Indonesia government 10-year sukuk with a yield of 4.25%, the Saudi Arabia Aramco sukuk, and that's at 3.75%, and Malaysia sovereign sukuk, which yields the highest at 4.5%. So, Ali, how do we get into sukuk? For beginners, I only recommend ETFs. There's a number of them out there, even in North America, like the ISGS from iShares. Or if you have access to a mutual fund that includes international sukuk issuers in their portfolio, that can get you some exposure. If you're not a beginner and you want to dabble more directly with sukuks, you have to get on a platform that gives you exposure to them, like international bond markets or specialized fixed income platforms. But you have to keep an eye on currency exchange because a lot of these international ones are not funded in your local currency. Now, we always talk about risks, and everything has risks. Even sukuks, while the risks is much less than interest-based bonds, there are still three to watch out for: liquidity risks, credit risks, and currency risks. Make sure you do your research and understand what you're getting into. And if you need help, seek professional help. At this point, you might be saying, Ali, how do I balance my portfolio with these new types of sukuks? Well, here's my approach. 10% of your portfolio should be in ETF sukuks. This provides you with liquidity. 5% in direct sovereign sukuks, which provides stability. And 5% in green sukuks for sustainability impact. Make sure you balance every 6 months and reinvest your contributions back into those sukuks so they can compound. And this is my strategy. Drop a comment below and let me know what your strategy is and if you have any other tips. If you want to learn more about sukuks, I'm going to leave a link in the description to Investopedia that gives you a little bit more detailed explanation. We live in a very crazy world today. We are facing risks that we've not faced in the past. And trends are breaking because things are intersecting that we've never seen before. Make sure you don't shy away from things like sukuks because they might be the stable part of your portfolio. And make sure you do your own research and consult a professional if you're interested. Thank you for watching until the end of the video. If you found this insightful, hit the like button, hit the subscribe button, share this with other people and other investors that don't know about sukuks. Make sure that you drop your sukuk questions in the comments below, and I'll do my best to answer them as soon as I can. Until next time, stay diversified, Stay safe, and I'll catch you in the next video.